This content reflects my own personal opinions and is not financial advice. With that said, let's kick off today's episode. Hey, welcome back. BlackRock's $2.5 billion tokenized fund is now live and accepted as collateral on Binance. At the same time, stablecoin pilots from major banks and payment networks show settlement and payment rails moving on-chain. The question is, how fast will programmable finance reshape global markets? Alright, so this first article is really big news because BlackRock's BUIDL, which is a $2.5 billion tokenized money fund, is now live on Binance chain and accepted as collateral, which converts institutional cash liquidity into programmable on-chain. This is actually immediate evidence of TradeFi liquidity being used on-chain by institutional desks and exchanges. We are seeing a lot of large institutions, whether there are tokenized funds or even ETF product holders that are acting as a custodian layer. It's going to bring that wealth from TradeFi onto the blockchain so it can be used for other tokenized investments, whether it's equities, other RWA coin projects. So this is very, very good news and it's all heading in the right direction. Now moving on to this, another interesting one, a major commercial platform, Alibaba, and a major bank, JPM, is trialing this stablecoin style payments for cross-border e-commerce, demonstrating real-world payment rails and merchant adoption. An RWA use case beyond treasuries, settlement and payments at scale. So this is huge because even though they are piloting the stablecoin payments for global e-commerce, it's making crypto as a real settlement infrastructure for commerce. So there's a huge explosive momentum now on RWAs on the payment rail system, including stablecoins. And we need these elements in order to bring to life the magnitude and the huge upside potential for the RWA coins that's going to be issued under this custody layer. So this is monumental and very significant. And as another news, following on the merchant side and the payments rails, and it's this one here, Mastercard and Circle are expanding the stablecoin settlement across EMEA, meaning that regulated payments infrastructure is now embracing tokenized dollars or euros or pounds or yen, which is a big step towards on-chain fiat rails for banks and merchants. So you can see the significance of this announcement and the possible repercussion this would have for other institutional merchants and other payment network providers. Who's to say that it's just Mastercard? There's going to be the likes of Visa and other payment rail system to follow suit. So this is quite huge and explosive from an RWA tokenization standpoint. Right, moving on to this another article which is around the SEC. The US regulators now clarifying the ETF filing process after the government shutdown reduces regulatory uncertainty for large institutional products, the ETFs, which in turn increase the likelihood of continued institutional flows into crypto and tokenized RWA structures. So this is important because leading up to the government shutdown last month, there was around 16 filed crypto-related ETF products that's landed on the desk of Paul Atkins, who is the US SEC chair. Now the recent reopening of the US government, now there's real pressure now to go through each one of those filings and come to a decision to whether approve or not to approve these crypto ETFs. I think the sentiment broadly is to approve all of these 16 issued ETF filings in one single swoop and just simply inaugurate the trading of these products, which would be that momentum that we need to rebound the actual loss of crypto liquidity that we've seen during the shutdown. So this is very important for these to be approved. And then lastly, we need to watch Europe because there are proposals to centralize crypto oversight under ESMA, which is the European Securities and Markets Authority. That's going to actually supervise the implementation of this crypto regulation in the Eurozone. It could actually slow approvals and introduce legal uncertainty. So we need to have a real watch list for any tokenized RWA rollouts occurring in the Eurozone. So in closing, from tokenized funds being used as collateral to stablecoin pilots powering merchant settlement and payment rails, the signal is clear. Real infrastructure is moving on chain. Regulatory clarity will help flows, while European oversight could actually slow them, but the trajectory is undeniable. The takeaway: programmable finance is no longer theory, it's deployment. The question is, how prepared are we for the pace of change? That's all I have for you for today. If you value clarity on Bitcoin, blockchain technology, and real-world assets tokenization, stay alert. Subscribe and enable all notifications to stay ahead of the curve. Share this episode with those who need to understand what's coming, friends, family, and colleagues. This channel aims to deliver insight, no noise, and no hype. Subscribe now.